Hello everyone! This is a full new episode from GoGrowPinoy about 6 lessons learned from my dad on how to invest. Okay, so number 1, investment goals. Why do you want to invest? You should think about why you're investing. Your goals will affect how aggressive or conservative your investments are. Maybe you want to go back to school in 3 years, have money for a house down payment in 7 years, build a college fund for a child, or build savings for your retirement. And you also have to ask yourself, how much money would you invest? If you don't have any idea, like most of us, how much you would invest, start somewhere. Start investing 10% of your gross salary every month. If you are young, better if you invest a bigger amount. And also, a question that you should consider is, when do you want to start investing? Actually, it is up to you, but the best time to start is now, or the day you start your job. Better if you start at a very young age and save for retirement. This is a very important question. How long would you invest? My dad says, invest in long term. If you are young and building for retirement, you would have a longer time horizon in which to recover from any big market declines, and would be able to benefit from the long-term trend of markets moving higher. And he also said, invest in short term. If you're just about to retire and you will need the money soon, and you do not want to risk losing the money in a market crash right before you need it, when you pump money into an investment for only a short period of time, hoping for a big return, you're speculating instead of investing. Second, pay off high interest debt. Pay off the high interest debt first so that you can actually keep any money you make by investing. Otherwise, the only investors making money are the ones who loan it to you at a high interest rate. Number 3, all of us should have this: emergency fund. Set aside 6 to 12 months worth of living expenses just in case of a job loss, injury, and illness. This money should be kept readily accessible and safe from swings in the market. Don't tie up all of your extra money in investments. Number 4, choose investment type. There are 4 most common investment types. Number 1 is stocks, also known as an equity or share. Stocks give you a stake in a company and its profits. Essentially, you get partial ownership of a public company. Real estate. Any real estate you buy and then rent out or resell is an ownership investment. A home you own fulfills a basic need, so it doesn't fall under this category. Next is mutual fund. Mutual fund is a collection of investments such as stocks, bonds, and other funds owned by a group of investors and managed by a professional money manager. When you buy a mutual fund, you're pooling your money along with other investors. You put money by buying units or shares of the fund. You can buy mutual funds in banks and trust companies, life insurance companies, credit unions, and mutual funds dealer. And lastly, bonds. Any type of debt investment. When you buy a bond, you loan money to an entity, a corporation or the government, for example, and they pay you back over a set period of time with a fixed interest rate. Invest in companies or industries that you know, because you're more likely to understand revenue models and future success. Stick only with business models you understood and avoiding ones you do not. Number 5, hold on tight. Make it a habit to save consistently. There is no shortcuts. Apply for pre-authorized deduction every payday from your bank. Market meltdown usually happens only in every 10 years. Study shows that those who panicked during the March 2009 U.S. economic downturn missed out on average of 178% based on a subsequent 5-year market return. Big risk, big life; small risk, small life. Lastly, number 6. Read, read, read. Continue learning about investing. Everything you read fills your head with new bits of information. The more knowledge you have, the better equipped you are to tackle any challenge you'll ever face. Remember, knowledge is the antidote of fear. So that's it. Those were the 6 lessons learned from my dad on how to invest. Please don't forget to share and subscribe. This is Go Grow Pinoy. Thank you for watching.